Hello, welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this sunny Monday, not morning, but afternoon actually, yeah. I hope you all had a great weekend. As always, before we jump into the markets, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I truly recommend, if you haven't done so, is go and check out the Elliott Wave principle, which you can read online for free when you're using the link in the description down below. Now that said, I already had a very productive day. I recorded a new video for my main YouTube channel, and I'm happy to report if things move properly, I actually should hit the 100,000 subscriber mark on my main YouTube channel before the end of the year. If you haven't subscribed to the main channel yet, just search for Christian Rauchenwald on YouTube and hit the subscribe button there. It really would do me a huge favor. And with that, we'll jump into it. We have, again, more or less break-even start into the day. There are a few things I want to point out today. I'm not sure where exactly we'll start with that. For those of you tuning in for the first time, so I've been selling cash secured puts for quite some time, mostly for GameStop. And then once I got shares assigned at the $30 strike price, I actually switched to selling covered calls. And then again, by selling covered calls, I was able to increase my share count. Also, all our other positions that are not GameStop are basically funded with the proceeds from GameStop. Overall, I'm up around 70% since I migrated to Interactive Broker in the middle of May. So the performance so far for roughly half a year is quite impressive, even more than I usually reach because of the extra option premiums. Anyway, now outside of the portfolio here that we have in Interactive Broker, I'm also going to use the streams to keep track of a few crypto movements, which I manage in my Coinbase portfolio, which you will not get to see, but nonetheless, hi Rai, great to have you here. Thank you for joining as usual. And nonetheless, you still will see the forecast. So one thing I did today, actually, I have to admit, I didn't check those things for quite some time, but I today actually sold my Algorand holdings and plan to re-enter at the 38.2 retracement. It's nice that, so if you've already watched some of my streams, then you know that when we apply Elliott Wave Theory, we usually, for example, have a wave 1, 2. And then when we apply an extension, very often, I'm going to show the full extension pattern that we're using. Very often, wave 3 will terminate around the 261.8 extension level or one of the other 38.2 or 61.8 levels. Yeah. Now, while this doesn't perfectly happen in this case, we can still, with the naked eye on the weekly chart for Algorand, see wave 1, wave 2, wave 3, wave 4, wave 5. And once we have a wave 3, we can use an expansion, so to take the 0.2, 0.3, 2.4, and we get the minimum target for wave 5 and the, in quotes, maximum target. So sometimes we exceed that as well, but usually wave 5 terminates somewhere in that range, yeah, which we can see happens here as well. So even though Algorand is a cryptocurrency and not a stock, we can see that at least here this move follows Elliott Wave principle in quotes to the letter. It's then followed by a corrective pattern that retraces a little bit more, I mean almost 100% to be fair, but we bounce on the 78.6 retracement considering the weekly chart and is now followed by another upwards move. Now, if we look a little closer, I think the daily chart should be sufficient. We get the following picture. We get a potential upward move like this. While this appears to be a free wave move, it also is, again, if we consider this a potential wave 1, 2, then we see that, again, we have our expansion levels and we actually bounce at the 261.8 expansion, which is why today I sold my Algorand. Because now, if this assumption is correct, we currently finished the third wave and would now retrace this entire move. So at least to the 38.2 retracement. Second candidate would be 61.8, 50%, 78.6, or 21.4. So while it's possible that I got out around the 21.4 retracement and we actually get another push up, I believe that despite sleeping through this whole movement and not paying attention to the charts, the move itself wasn't that bad. Now, so much about Algorand. Now, additionally, I got out of XYO recently, although that was a bad exit because I didn't bother to check the bigger picture pattern and missed some potential profits here. However, we re-entered in this retracement area, although the re-entry was worse than the exit, so I missed a little bit of profit here. And in XYO, I actually expected we're currently getting another fifth wave push, so 1, 2, 3, 4, and 5, or 3 not even finished. We also have to consider that. That's actually the more likely scenario. So here we have 1, 2, 3 not finished. Target would be up here. And then that third wave actually subdivides into 1, 2, 3, 4. And now we get wave 5. That should take us to at least 0.01156, which is basically still around, what, 30%, 40% up. Now, obviously not financial advice, just my personal opinion. But yeah, like that's why I currently hold XYO again with a planned exit around here. And I'm going to double check because I made a few other moves today. I actually cleaned up some of my crypto holdings today. So yeah, like got rid of some of the altcoins that I just don't have the time or interest to follow around. And instead, yeah, StoreJ is the next one, or storage actually, yeah. This one is tricky. We can also with the naked eye in quote see that we might have a 5-wave move up here followed by a corrective move down. But the question is, will we get another complete 5-wave move, or will this be wave 1, 2, and wave 3, or will this be just some corrective pattern, in which case our minimum target would be here at 80 cents. So for the storage tokens that I'm holding, I currently have a limit sell order at 80 cents or 81, I think 80 cents straight away. And yeah, that's it. And then outside of that, I hold currently, I have to check what order we have there. So for the rest, I hold USDC at Coinbase because that pays interest as well. And that's actually from my Algorand position, yeah. So for Algorand, I actually, as mentioned, have my re-entry planned here. If I'm wrong and we go further up, then so be it. Then I missed out on some profit. It's okay. And I will look for something else to buy then. If I'm right, then it basically means that I can increase my position by 25% or so. So basically exit it here, re-enter here. And yeah, that's about the crypto part. So I think we'll add or cover crypto in the future a little bit more within the stream. So while not exclusively, but at least to a certain extent. But we will keep the focus on the stocks and options trading. I just wanted to share those things as well, since I'm also using Motive Wave to do the analysis here with my chart source being Coinbase. I don't know why. So for stocks, it works fairly well that positions that I execute are shown on the chart from Interactive Broker into Motive Wave. But for the crypto part, it just doesn't work that way, unfortunately. But yeah. And I'm gonna have a sip. Don't forget, guys, to hydrate as well. Obviously, also don't forget, like, subscribe, enable notifications so you don't miss out on future streams and videos. And yeah, I'm gonna have a sip, and then we're gonna jump into GameStop and our other positions. Also, straight away, today's stream might be a little bit shorter. I expect to have a good acquaintance to visit us, and it should be around 4. I just don't know exactly when. So which means it's like in potentially around 30 minutes from now. So it could be that we have a short stream. Yeah, it could be that we have a regular stream. Just want to give you a heads up. Also this week, before I forget to mention it, the 28th is a holiday. And I think on the 29th, market closes early. So which means on the 28th, we will not have a stream. And or if we have one, it will focus mainly on crypto or catching up with things we didn't have time for. And on the 29th, we should have a regular stream, just the market will close early. So now, where were we? So GameStop, as said, we hold 600 shares, actually more than that, but in Interactive Broker 600. We initially started with, if I'm not mistaken, 300 or 400 shares that we got assigned from our cash secured puts. And then by collecting more and more premium from selling covered calls, we actually increased this to a total of 600 shares. Now, 600 shares for some people out there might be a fortune. For other people out there, it's going to be a super small position. I don't care about that. For me, it's the right position to have. Yeah. So against those 600 shares, we already sold covered calls that expire in January $30 covered calls because we also got the shares assigned at 600. I have mixed feelings about having those shares called away. It would allow us to sell cash secured puts again, but obviously if we have a rally up, we might miss out on some profit. But then again, I also hold shares at ComputerShare, and the shares that I hold here are actually specifically for option trading. And considering that we are looking at let's double check what we have right now. Just a second. Yeah. So considering that we're actually looking at 72% so far this year as of today, since the middle of May, who am I to complain if we miss out on potential upside on those 600 shares? Yeah. And yeah, if you're wondering why I say 72, it's because I used Interactive Broker as a data source for Motive Wave already before I migrated the portfolio. So I only had a small balance of, I don't know, $500 for most of that time. And basically every month had $20 to $50 in fee that got deducted. Yeah. And so most of those 12% we can actually add on top here because it's not really a trading loss, but it's just a fee I paid for using it to chart. Anyway, even if we ignore that, it's still 60% since the middle of May or since year to date. So it's still beating the index and everything else and whatnot. So still quite a nice result. Gonna pat myself on the back here. So anyway, jumping into GameStop, I think not much changed. So we still have a little bit of trouble in terms of labeling this move here. We spent some time in the episode on Friday trying to do this. So if you want to have more details, check out Friday's episode, because if we do it again today, it just is repetition that doesn't benefit anyone. But so on Friday pretty much was the last time. When we looked closer into this, the big problem here is we have an option where we would consider that we already are retracing now, which would be in quotes in our favor. Our options expire here. So if we now have a fourth wave and then a fifth wave, we might actually get our options to expire worthless and keep our shares. Or if we go above 30, then only slightly. And yeah, we can just sell $30 cash secured puts immediately afterwards. Or if we choose so to just manually buy shares or whatever. The other option, however, is that we're still short one push up that would potentially push us above 30 maybe this week already. And then it comes down to whoever bought the options from us, if they would exercise them early or not. If they don't exercise them early, I think we are going to be fine, because then we should get the retracement that we have been waiting for. And then we get wave 5, which means, again, likely options expire worthless, but potentially then closer to 30, allowing us to maybe not sell the $30 strike price, but some higher strike price for still decent premium. But yeah, so while I would love to always tell you this is how it's gonna go and I'm 100% sure, the fact of the matter is, with this specific upward movement here, I'm not 100% sure. We have a few things that indicate that we basically have a wave 1, 2, 3, 4, but then that fifth wave here seems to be not finished yet. Yeah. So if we look here at the moving averages, that would be our wave 1, 2. And then for the third wave, we have 1, 2, 3, 4, and 5. So that checks out for wave 3. And then again, we would have then wave 4, retracing that third wave, and now wave 5. That technically might already have hit the profit targets that we are expecting here, but it's visually looks like a 3-wave move instead of a 5-wave move, which, by the way, we can already adjust this here up to reflect this entire area. Yeah, which means, again, yeah, while I think visually there might be a move missing based on the moving averages that are overlapping here, we might actually already be in the downwards move. It doesn't change our overall prediction. I'm going to have to open my prediction sheet 1 second. That points for GameStop's next targets to be, where do we have it here? 32.16 to 33.81. But again, first we might go down as low as 23.17. But on the other hand, again, yeah, like I'm not 100% certain with this detailed wave count. I'm relatively confident with the bigger wave counts that we have, but this part is a little bit of a of an in quotes issue that might change where things are going from here. But so again, if you want to have more details about the different options or possibilities that I see in this area here, check out last Friday's episode, because there we cover that in more detail. Now with that, we can move on to Barnes & Noble Education Inc. There we called it quite nicely. I mean, to be fair, I called it wrong first because I misidentified this move here that turned around what I thought would be at the 38.2 retracement level, just to then call it actually right, that we'll get the turnaround at 845, or in the range from 842.37 down to 814. I entered here at 845, or actually I entered wrongly a little bit here, and then again 845, and then here, and we increased our position in here because it looks like we finished this move here to the 78.6 retracement. Now there's no guarantee yet that this move here is done, low 941, low 945, but if it would be, then our profit targets would be 1226. So the profit targets for this move here would be, so just for this move would be 1226 to 1439. However, that does not change our overall existing profit targets that are here and written down. They are 1419, which is based on this forecast, to 1977. More precisely, I would guesstimate that this move here, 1, 2, 3, should take us to 1603, or in the area of 1603 to 17.11. And that's why I have here my limit order to take profits if that happens. If I'm wrong, the stop loss would need to be either at 880 or better at the low here at 831. So yes, by now there is a 17 or almost 20% risk, but the risk reward ratio with 70 or 60 to 70% upside is still not that bad. My position here is obviously, as you see, not that big. We have 45 shares worth $450 or so. And right now we are at our average, because again, we entered somewhere here a little wrong, in quotes. I mean, nobody's perfect. And then caught it here nicely to average down a little bit. But we'll still have to wait. We're looking at the 12-hour chart, so it's going to take a couple of days or weeks to confirm either that we are right, then we'll see the next upwards movement to start in the next couple of days and weeks, or that we're wrong and we break to the bottom and then should consider getting out of our position to find better spots in potentially other assets. Moving on to Grab, I think we also covered Grab in a little bit more detail last week. It's unchanged. We're looking at a weekly chart, so it's probably going to take till January or the first quarter of next year before we have any kind of change. The original forecast somewhere back here in May or June was that this might be wave 1-2 or wave 1-2, and that we are now potentially getting wave 3, which would have then our profit targets at 942 to 1088, which we still have written down like this. Or alternatively, worst case, this would be wave A, wave B, and wave C, in which case we already hit the, in quotes, expected maximum target, although we could also go higher before we go further down. So I only hold one call option with $50 risk here. That's currently $100 something in profit, or not, 86 right now, okay? So there's no point in taking profit, in my opinion, because the risk is quite low. Even if I've been proven wrong and we go down from here, I'll lose $50 on this trade. However, if I'm proven completely right, until January 26, we could reach this target area here, and then the option would pay off, quite a lot more in terms of risk reward ratio. So I'm just going to hold on to this trade. If you entered somewhere here, then I would keep an eye on the movements and consider not writing it down if it turns out to be an A, B, C corrective pattern, but instead again, then just, get out, break even, or with a small profit if it starts to turn down. Again, make your own decisions, do your own research, but that's what I would do. Moving on to immersion, here we are in a waiting pattern for quite some time to get the confirmation that indeed the 61.8 retracement here marks the bottom and end of the correction. We're also on a weekly chart, so again, we probably will wait until the first quarter next year to have enough candles to provide us with a sufficient confirmation. Yeah, you can check out one of the recent streams for more details about the different wave patterns that I see on this chart. And based on that, make your decision. I think right now an entry still is not too late because our target areas are higher up. So even if I'm right, the reward is decent and the risk ratio is relatively small because you could set it at the recent low that we had at 817. So risk reward ratio not too bad still. Moving on to costs. Yeah, so here we are just waiting. We're on a daily chart, but we need to see either a break to the top of 879 or to the bottom of 652. And we've been moving in between that area for quite some time, and we need to see one of those two things happen, either to be proven right, then we'll go up from here, which would mean the correction officially ended here, or to be proven wrong and to break down, in which case the 61.8 retracement would be the next goal to hit. Yeah, here our position is a little bigger, but also not substantially, like not huge enough to worry about it either way. We're just going to hold on and see how it plays out. If we break the 61.8 retracement, then I might consider getting out. But then on the other hand, our position is not so big that it matters. So I might then still consider waiting to see if we get a bounce from here, or I don't know. I guess we'll cross that bridge when we get there. Potentially, if you would want to, in quotes, gamble a bit, you could enter calls right now with the stop loss at the low here, simply betting on that the corrective pattern actually finished with this ABC free wave move, in which case we would go up to the next target that we don't have. I don't have one written down. But yeah, so again, if you want to, you can play it like this, or you just sit this one out. Alternatively, you could also short it, and in that case, then have your stop loss at 879. Theoretically, you could do both, but then worst case, what would happen is maybe we hit the top and then we hit the bottom and then it goes up, so you get stopped out on both. Don't think that's gonna be the case, but it's possible. But so I said, you could theoretically have both trades, and so that one of them will be losing. So if we go up, the short trade will be stopped out here, but the long position should make up for it in the long run. If we break down, then the long trade gets stopped out and your short position should make up for it, because we should at least, in my opinion, reach the 61.8 retracement. Yeah, moving on, NEO, I think NEO we didn't cover. Right now on the daily chart, also on Friday, we covered a little bit more. Yeah, so unchanged, we believe that our correction ended here. We actually increased our position a little bit. We don't hold a lot of shares. I think we hold exactly 100 shares right now, and will either be proven right and will go up from here, or will be proven at least partially wrong and get another push down. Stop loss would need to be at 368, so there is around 25% risk. However, take profit could be anywhere from 681 to 904 or higher. So that would be the first, in quotes, conservative target area that I see here, if I turn out to be right on this pattern. So far with NEO, we did it quite well. So we entered here, exited here, and we bought 1 or 2 shares here. And with the assumption, or with the clear explanation that, well, this correction might be the finished correction because we already got close to 61.8%. However, it didn't look like it, so only enter in small tranches, and that's why we bought like small, I think 5 shares here, and then the rest of the shares pretty much down here. And yeah, we'll see how this plays out, but we'll have to wait. Moving on to Novavax, where we now believe that our correction finally finished, in which case we're moving up. Unfortunately, my call options will expire on January 17th as well, so it will need a small miracle for them to still get into the money. However, with a little bit of luck and a little bit of enough upward movement, they might move away from a total loss. So that I can close them out for a smaller loss, but that would also require, like strong movements, or why not? We'll see how it plays out. So I don't wanna add more funds to this position. So losing around $250 on this trade is okay. Can live with that. Losing more, don't want to do that. if we break the 1074, that would be one of the points where I would consider entering more or opening additional options or rolling, if it makes sense, the existing ones into the future. Although I cannot roll them because I always will have to pay because it's buying options. Yeah. But yeah, so we'll have to wait and see. I believe again that sorry, 1 second, my phone is ringing. So back again. Sorry, that was the acquaintance that I mentioned at my job. So we'll be able to finish the stream. The stream. He's running a little bit late. Yeah. So where were we? So based on the pattern, I believe we said that we will go up from here. Question is, will I be able to salvage my trade? And again, personally, I would wait for the 1074 to fall, because that would be a strong indicator that whatever 5-wave move we have down here is indeed finished. Not a guarantee, just a strong indicator, where I would then consider potentially opening more call options, or maybe even getting shares, depending on how much cash we have available at the time. Moving on. What do we want to cover? Let's take a look at DJT. Still moving sideways. Yeah, we don't hold a horse in that race, but we have our predictions. I'm not going to repeat them for now. Amazon, there we also have no horse in the race, but we covered it more on Friday, so check out Friday's episode if you want to know more about what I believe is going to happen here. And yeah, that's pretty much it. I mean, if you want to see something specific forecasted or labeled or so, then please share it in the chat. Other than that, I actually thought about just a second, I need to bring a browser over. Earnings calendar, there we go. Earnings calendar, yeah. I thought about for earnings to again, everything you see should be or is usually linked in the video description down below. Now come on, now my browser is dying. Options to add, there we go. Yeah. So I thought about Zoom has earnings, but when today? Is it after market close? Okay, so that would actually be interesting. So I thought about doing some credit spreads on stocks that have earnings if we can see the right patterns. So if we go for Zoom, for example, we can do a bull put spread, which means we are basically buying a put option and selling a higher strike put option to reduce the cost, which basically gives us a net credit. And that means we have a fixed maximum loss, which is basically if the stock, that's actually a bullish move, yeah. So which means that if the stock price stays above this by expiration, we obviously would have to go here, by the way. We make a profit, and if it falls, we have a fixed loss. Yeah. So this kind of like gives us some almost binary trading choices. Although if we talk about earnings, we would actually say, okay, we would want to close that trade since today is the 25th. So we would want to close that trade tomorrow as soon as possible. Yeah. So which would be almost 24 hours from now. Yeah, so around this time, or actually free, come on. No, it should be 3:30. Yeah, where we actually are trading on a curve. So, which means, however, we can, let's add Zoom here to take a look. So I believe by doing that, we might be able to spot stocks that have a very, very clear pattern. And then depending on the pattern, if it's clear enough, we can enter a binary trade with a fixed risk and fixed payout, so where we know exactly how much we can lose if we're wrong, to potentially grow the portfolio faster. Yeah. Now, if we look at Zoom here, we obviously on the yearly chart have a strong move up, and since then an 80% collapse in quotes. Yeah. Which means we would have to start the labeling at the low that we have here, which means we can go on the weekly chart and we actually would have to start to label here, which brings up the problem that this could be 1, 2, 3, 4, 5, but this could also be A, B, C of some kind. So if we go on a 3-day chart, still not much, well, it might already be giving us a little bit of information. Yeah, not making me happy here. So we bounce here at 2618, so daily chart. Yeah, no real bounce. So here we don't fully bounce. Kennedy channeling technique would suggest that this is wave 1, 2, 3, 4, and that we're now in the 5th wave. But then we already exceed our usual 5-wave targets, as we can see. I mean, we hit the 100% target on the spot. We then retrace a little bit, but not enough to assume that this here is, I mean, we retraced 21.4% probably, yeah, so retracement, yeah, almost exactly. But that points towards not a clear enough pattern. What we would be looking for would be basically companies that are about to probably have huge earnings, which would mostly happen before the 3rd wave, because 3rd wave is usually the strongest one. Now, while there might be more room up, it's not a clear enough pattern for us to consider getting in quotes binary options here. Yeah, so we can still check out how it looks like. So on one hand we would have a bull put spread, on the other hand we can set up a bull call spread. Now based on the chart here, we would expect basically that we either break the 92 or not. Yeah, so sorry, moving back here, so which means we would want to have a pattern where we get this break-even line to around 92. Oh, that's an interesting curve. So theoretically, that one would be tomorrow at least. That one would be actually permanently. No, that will not happen. So we probably cannot sell this one. If we could. Oh, and will also then, depending on other factors, it actually will change how it behaves. So we're not gonna play this game. So tomorrow 3 p.m. roughly. So this here would be a bet where we would say, okay, we get $265 credit, and if we are wrong, we are looking at a $35 loss at expiration. That would be, but it would even be tomorrow be our maximum loss if we fall below 88. Yeah, so we could actually make that play because the risk reward ratio is great, which means we would buy the all of the premiums might be different. There is low volumes for those apparently, so 99 put and 102 put. Let's check. Zoom stock 29. So we buy the strategy builder. We buy the we buy the 102 put, and we sell the 99 put. That should be the, yeah, and it says so we would have a maximum risk here of, oh no, that's actually the other way. So switch that. So we sell this one and we buy the other one. And then we actually are at $80 or $60 debit. Okay, not a credit spread. But we would have $86 risk for $214 reward if we are right. So tomorrow the curve would look like this, which also means our, refresh. Yeah, so okay, there is not enough volume to have accurate premiums here. So this calculation here is sadly wrong, as we can see, because the curve would be so flat that in this case we actually while it tells us here that our break even would be at 92, it actually would be at 95 or so. No, they are break even 99.86. Yeah, so that's not going to fly. However, in the other direction, it would work similarly. So instead of puts, we do the same with 1 second. Now we would need the other one, so like this. So we would do the same with calls. So we basically sell a specific call, which obviously they should be out of the money ideally. And let's go to the expiration. So you see the curve. And we then have a fixed point where basically as long as we stay below a certain price, we pocket the credit. And our max loss is limited by depending how far away we have our the call that we sold. Yeah. Now for Zoom, as said, we don't have a clear pattern, so we're not going to enter options in option strat, don't have enough data, so we're not going to entertain that idea further. But let's see what else we can find outside of Zoom that has today after market close. Are there options for that? Yes, there are. So here, December would be the next expiration. And so if we pick the closest expiration here, and we still need to label it, of course, so search. Now, where did you put it? Didn't I just? You put it in here. Okay, remove ticker. I picked the wrong one. Yeah, obviously we want to search here. There, that we can close. Now that's something that looks in quotes a little bit more promising, because even on the yearly chart, we can see what looks to be the potential for 1, 2, 3 in progress. Yeah. So if we move closer, monthly chart, there we clearly have 5 waves. So we're looking at the right one. Yeah. So we have our wave 1, 2, 3, 4, 5. Although 5, that might be a fluke, so 5 might be here, followed by what appears to be a flat correction with a strong third wave. So which means we potentially have this here, wave. Again, I assume it might finish here because this candle here might be a fluke. And wave 1, 2. And then we have potentially the next here, and then we retrace here. Okay, then let's look closer. Let's actually jump to the daily chart, where we also have 1, 2, 3, 4, and then 5. Flat correction. Considering we retrace that far here, that has to be part of the correction. And then how much did we correct already? So 50%. But then we have a 3-wave move here, so I actually would expect that we're currently still in some part of the correction. Although here we already have 1, 2, 3, 4, 5, so we already finished a 5-wave move. That's a tricky choice. Okay, if we move in further, might be a little bit too close, but here we have our wave 1, 2. Gap up here, close it down. So 1, 2, 3, 4. Okay, that's an hourly chart, 5. So this might be something where we could check if we can get a decent option for its upward movement. Currently we're at around 134. So we would need to find something that has the, okay, so for example, 130. So this here, but we would want to have expiration tomorrow, or not tomorrow, but yeah, tomorrow actually, Tuesday. So we would have basically, unless we, how low would we get if the earnings I miss? Maybe 120, okay. 120 would be $300 loss, and on the upside, we probably will not jump $10, maybe, yeah. Range. So max 470 to 500. Okay, am I confident enough to risk $470 on this move here? No, because it's also not the spot we're looking for. It's also not the situation where we would expect a third wave move. We could expect that, or we could assume that the correction is over here, but it's not clear enough in terms of pointing towards a wave 3 move. Yeah? Let's see if we can find a third example to look at. So Zoom. What's that? National Australian Bank Ltd. Okay. That might actually, let's take a look. So let's remove that. Not this one, but here. What was the ticker? NAPC. Yep. NAPC. Question is again, I should have checked it first. Do we have options for NAPC? Yeah? No, does not look like it. Yeah, so yeah, does not look like it. So don't have to label it. Remove. If anyone out there, so if anyone among you, if anyone among all of you knows a site that shows earnings for only assets that also have options, so that would be splendid. WWD. Woodward has options. Okay, so there we go. Do we get probably also not what we're looking for. So the yearly chart already shows what could potentially be 1, 2, 3, 4, and then 5. Question would be how far we are along with that potential wave 5. We could try to label it from here, although this could be a fluke. Probably not, but okay, so that was the COVID crash, okay. And then since then we have wave 1, wave 2. Oh, that might actually be interesting. So for a second, let's check. So we would have our wave 1, wave 2, which are quite big. Okay, then that doesn't provide us with a target yet. So then we have here the next wave 1, 2, which bounces at the 2618 retracement, which unfortunately means we have to, where we are out of this. Although actually, on the other hand, would point towards we are going to retrace, because this looks like we have wave A, B, C, and then we get wave C. So for A, B, C, to retrace at least the 131. Unless this is the full correction. And then this would be the next 1, 2, and actually wave 3. Okay. I don't think we'll get a, in quotes, free meal here. Yeah. So let's check. But yeah, but let's check. So WWD. So if our assumption would be that we go down from here, so we would say below 175, for example. Yeah? So below 175, 20th of December. Again, we only care about tomorrow. So in around 24 hours. And yeah, that's not gonna fly like this. So we said 175. So we have to move 173, 175. Okay, that would be 400 credit, 580 if we're wrong. Oh, that would be for upward moving, of course. Yeah. So if we say, but we actually want to bet against it. So again, the other way, sorry for that. So tomorrow, and extend that a little bit. And again, we want to have 175 as our break even. That would be around 300 loss if we're wrong, and around, depending on how right we are, around, yeah, it's like a 1-to-1 trade unless we hold it till expiration. But then same, yeah. Yeah, tough choice. Although there we don't have a lot of volume, so 170. So we sell the 170 and buy the 180 call. Okay, so let's check that. So sell the 170 and buy the 180 and sell the 170 call, which would have $600 in credit, and the curve for tomorrow would look like this. So if we break even 175, and if we fall to 160, we are around $260, and if we rally up, we at most lose 480. Okay, so, and we would need to fall to 130 to actually, how far would I expect us to fall if we are right? And obviously not in one day either, but we would expect to actually fall to 140. Okay, so what would be at 140? We would actually have our maximum profit, although we wouldn't expect it to happen in one go. Although it could be similar to this, which is, although a weekly, daily. 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4, 5. Okay, correction potentially finished. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So okay, no. Also gonna stay out of this one. Yeah, have to work on that. So we're gonna do that in the future a little bit more, to just keep an eye on things and see if potentially we spot a good entry. So something that clearly shows the pattern of a strong move up or down, and then based on what the options risk reward ratio is, then make some extra trades this way. Yeah, as last week and the weeks before, I'm still working on structuring the stream a little better, so we have dedicated sections, maybe for crypto, maybe for, again, potential earnings plays that could be for today, or so today after market close, or tomorrow after before market open. And to still review the rest of our stuff. But I think for today, we actually will call it a day. I'm going to say thanks for watching. I hope you were able to take something away from this stream. Don't forget, like, subscribe, and enable notifications. And I hope to see you then tomorrow around 5 minutes before market open for another episode of Daily Market Mastery. Yeah, so have a great rest of the day and a successful trading week ahead. Till then, bye-bye.